All right, let's dive right into this explainer. Today, we're unpacking Southern Copper Corporation's Q1 2026 earnings report. Now, financial filings can be a bit dense, I know, but trust me, this one is absolutely fascinating. We're going to look under the hood and figure out exactly what fundamentals drove this massive, record-breaking quarter for them. Just take a look at this jaw-dropping figure, $1.58 billion. That's a record-breaking $1.58 billion in net income, and that's just for the first 3 months of the year. It's a historic milestone for sure. Understanding exactly how they pulled this off is absolutely crucial to grasping their current position in the market. Now, right alongside these soaring profits, we do have to respectfully acknowledge a major transition at the top. The company announced the passing of their longtime CEO, Oscar Gonzalez Rocha. He was a true industry veteran who leaves behind a huge legacy of operational excellence. Stepping into the role is Leonardo Contreras Lerda de Tejada, and he's taking the reins during a period of intense growth, really looking to build on that incredibly strong foundation. So, how do we make sense of all this? We're going to systematically break down this filing into 5 key areas. First, the Q1 headline results. Second, the top and bottom line. Third, mining operations and costs. Fourth, cash flow and assets. And finally, dividends and the broader market view.
Let's jump right into Section 1, Q1 2026 headline results.
The sheer scale of their year-over-year growth here is just wild. Net sales surged 36.2% to $4.25 billion. And that revenue flowed beautifully to the bottom line, with net income spiking almost 67% to hit that $1.58 billion mark we just talked about. For shareholders, that meant earnings per share jumped a massive 67% to $1.92. Management was clearly thrilled. In their official release, they pointed directly to this historic achievement, chalking it up to 2 main catalysts: higher sales volumes and significantly better metals prices across the board. But you know us, a good analyst always looks a little deeper than the headlines. So, let's move to Section 2, top and bottom line. This is where we see how that top-line revenue actually becomes profit. Look closely at the relationship here on the income statement. Net sales grew by over $1 billion. But check out their total operating costs. They only went up by about 11.6%, from $1.58 billion to roughly $1.77 billion. When your revenue grows at 36% and your costs only inch up by 11%, you create a massive structural expansion in your profit margins. It's textbook operational leverage. And that operational leverage is exactly why you see their adjusted EBITDA margin, which is basically their core operating profitability, just skyrocket on this chart. They went from what was already a very healthy 55.9% margin last year to a staggering 63.8% in Q1 2026. In simple terms, they're keeping a significantly larger piece of a much, much bigger pie. All right, on to Section 3, mining operations and costs. Let's look under the hood at the physical reality driving these numbers. So the financials are stellar, right? But the physical reality out in the dirt was actually a little mixed. Interestingly enough, overall copper production actually fell 4.0% this quarter compared to the same time last year. Think about that for a second. They made vastly more money while actually pulling slightly less copper out of the ground. What caused that dip? Well, it was primarily driven by lower ore grades and recoveries down in their Peruvian operations, which saw a 9.8% decline. The company does note, however, that they expect those ore grades to bounce back by the end of 2026. Plus, this dip in Peru was partially offset by a really solid 5.5% production increase at the La Caridad mine over in Mexico. But here is perhaps the most jarring number in the entire report: -11 cents. You heard that right. Southern Copper's operating cash cost per pound of copper produced was actually -11 cents. Last year, it cost them 77 cents to produce a pound of copper. This quarter, -11. So, how on earth does a miner achieve negative costs? It's all about the other materials they dig up in the process. The prices of the byproducts they mine alongside copper were just incredibly high. Silver prices jumped nearly 158%, molybdenum was up 24%, and zinc climbed 14%. Because these byproduct revenue credits spiked by over 87%, the company was essentially getting paid to produce copper this quarter. It's pretty amazing. Let's pivot to Section 4, cash flow and assets. Let's see how they're managing this windfall. Operating cash flow is literally the lifeblood of a heavy, capital-intensive industry like mining. And here, we see it more than doubled year over year to nearly $1.7 billion. That massive cash engine allowed them to comfortably fund about $442 million in capital investments, which means they're feeding future growth without stressing their day-to-day liquidity at all. You can really see their conservative approach to their capital structure here, too. Look at the asset growth. Total assets swelled from under $20 billion to almost $22 billion over the year. But look right next to it. Their long-term debt stayed perfectly flat at $6.75 billion. So they're growing the asset base entirely through operating cash flow, totally avoiding the over-leveraging trap that tends to crush miners during boom cycles. Which brings us to our final section, dividends and market view. With a balance sheet this strong, what does it mean for the shareholders? Well, the board directly rewarded them with a two-step approach. First, they authorized a really solid $1 per quarterly cash dividend per share. Second, they issued a fractional stock dividend of 0.01 shares per share, with cash given in lieu of fractions based on a very healthy reference price of $187.45. But, despite the record earnings and these generous payouts, we have to look at the whole picture. And Wall Street is actually pretty divided right now. Impartial reporting requires us to note that it's not universally bullish out there. Morgan Stanley recently upgraded their price target for the stock to $132, but analysts over at UBS are maintaining a sell rating. It's a great reminder that macroeconomic views on commodity cycles can vary wildly, even when a specific company is executing flawlessly. Regardless of the daily noise, management is clearly looking long-term. They are targeting a massive scale-up to 1.6 million tons of total copper volume by 2033. And to get there, they've planned $1.92 billion in capital projects for 2026 alone, with a heavy focus on organic growth through the Tía María project in Peru and El Pilar in Mexico. Which leaves us with this final provocative thought. They have a $20.5 billion strategic capital investment program slated for this decade. Given the global transition to renewable energy and the immense copper demand that comes with it, we have to ask, are these record Q1 earnings just a cyclical peak? Or are they the rock-solid foundation for Southern Copper to absolutely dominate the global market for the next decade? It's a fascinating question, and definitely one we'll be watching closely. Thanks for joining me on this explainer, and keep learning.